When billionaire Elon Musk bought Twitter, some Tesla investors worried Musk was abandoning the electric vehicle maker to focus on the social media company.
In today's video, I react to a mini documentary from the Wall Street Journal about Elon Musk, Tesla stock, and Twitter. This is going to be good. Speaking of good for you, check the link in the description. You know you want to. FYI, I dropped 2 exclusive videos on Patreon today, including what is unquestionably the spiciest Q&A of all time, in which I share my thoughts on Andrew Tate's arrest and the allegations, whether or not I've been jabbed, the emotionally induced brain damage exposing a lot of so-called Tesla investors, mentors, masterminds, network marketing, and plenty more. You definitely don't want to miss this one. If you're not already a member, you can join Patreon with the card in the corner or the link in the pinned comment.
When billionaire Elon Musk bought Twitter, some Tesla investors worried Musk was abandoning the electric vehicle maker to focus on the social media company.
So in Twitter,
what could possibly go wrong?
Since the deal's close in late October, Tesla shares have slipped, ending the year down 65%, the company's worst year on record.
So how much of this decline in Tesla stock can we blame on the Twitter acquisition? Good question. You know the answer? Nobody fucking knows. However, let's look at some other stonks, some growth stonks, some tech stonks, and see what they've done over the last year and also since the Twitter deal itself closed. This is the last 12 months. We're looking at a comparison between Tesla stock, Amazon, Rivian, Alphabet, Google's parent company, and Lucid, just to get an idea. Can anyone notice a trend? Spoiler alert, yeah, down. Over the last 1 year, Tesla down almost 69%, Amazon down nearly 50%, Rivian down about 80%, Alphabet stock down almost 40%, and Lucid stock down about 85%. P.S. the bell curve is real. Now, if we look at this chart, the comparison of each of these different stocks, I don't think it's that much of a stretch to say there does seem to be a general trend. Generally, over the last 12 months, these stocks have trended down and generally speaking, moved down together. They haven't perfectly tracked one another, but the general trends seem to be quite similar. That's why these lines continue to follow each other, all the way down. Does this mean that the Twitter deal had nothing to do with Tesla stock price changing? I doubt it. But does it mean there could be some other factors as well, contributing to tech stocks, growth stocks, especially Tesla, being down? The answer would be, duh. Now let's get a little more specific. We are looking at the change in stock prices of Tesla, Rivian, Lucid, Amazon, ARK's flagship fund, ARK, Alphabet stock, and Meta stock, formerly Facebook, since the Twitter deal closed in late October. Down the side here, we can see the change in each of these stocks. Tesla down almost 70% since the deal closed. ARK's flagship fund down almost 75%. Hang on, but doesn't ARK's fund pretty much entirely contain growth and tech stocks, disruptive, innovative companies? Isn't it weird that ARK's flagship fund's down almost identically to Tesla stock since the Twitter deal closed? Isn't that quite a coincidence? Lucid stock down over 80% since the Twitter deal closed. I'm sure all Lucid investors have every right to be angry at big bad billionaire Elon Musk for buying Twitter, because that's why Lucid stock's down. And that's why Rivian stock's down 86.7% over that same time frame. Also explains why Meta stock's down about 60% since then. Also explains why Amazon stock's down over 50% since Elon's Twitter deal closed. I guess that must also explain why Alphabet stock, Google's parent company, is down over 40% since Elon's Twitter deal closed. As we can see here, Tesla stock is down only and solely because of the Twitter deal and nothing else, as this chart obviously proves beyond a shadow of a doubt. Now, don't get me wrong, I'm not suggesting that there's no impact from the Twitter acquisition at all. I'm just trying to point out to the people who think, oh, Elon, f*** you, Elon, it's your fault, Elon. There may have been some other factors at play as well, like investors panicking their way out of growth stocks, tech stocks, and companies that are investing heavily in future opportunities today, and panicking their way into the tried and true, oh, I better buy some energy stocks, that's nice and safe. Not going to age well.
But the reason for the sell-off goes far beyond Twitter. Here's what drove Tesla investors away in 2022 and what's affecting the car maker going into 2023. Let's start with demand. For years, Tesla has stood out as the leader in the electric vehicle space. And while its dominance continued in the third quarter of 2022, its market share slipped to 61%.
In the last year, we've seen an explosion of competing EV models for Tesla. And as that number continues to grow over the years, the concern is whether or not demand for Tesla vehicles will continue to stay as high as it has been in the past.
According to JD Power, there were 33 EV models available in the US at the end of 2021. But by the end of 2022, that number had jumped to 53 models. Tesla still held 4 of the top 5 selling EVs last year, according to S&P Global Mobility. But the sell-off in Tesla shares reflects investors' fear that its hold won't last as newer models arrive.
I strongly object to suggesting that Tesla investors have fears that Tesla may lose their stranglehold, lose their dominance because there's more vehicles entering the market that are considered electric. These aren't investors, they're idiots. who also own Tesla stock. It's a big difference. You literally need to be a moron not to understand this. Just the fucking facts. As I tweeted the other day, Model Y is fast becoming, if not already, the best-selling vehicle. Country after country after country. Soon it'll be the best-selling vehicle on Earth. Then it's going to go on and sell 2+ million vehicles per year, then probably 3+ million units per year. Just because a company announces or begins production of an electric vehicle doesn't mean Tesla has anything to worry about whatsoever. If said companies start to develop technology that's superior to Tesla's with their CD and E grade engineers, good luck with that. Stranger things have happened, I guess. If companies can actually ramp up high volume production of compelling, profitable vehicles that have comparable features and functionality, including safety, performance, software components, etc. to Tesla vehicles, then there may be some legitimate concerns as to whether these companies might start to eat some of Tesla's lunch. But right now, there is only one horse, pun intended, in this race. It's Tesla. Second place is so far behind Tesla, they need a fucking telescope to see them. If the data begins to show that a competing electric vehicle starts climbing up the charts and is fast approaching Tesla's Model Y as a #1 selling vehicle in X, Y, or Z region, then you might say to yourself, maybe there's something in this. Maybe the competition is finally coming. But if that doesn't materialize, and spoiler alert it won't, it will confirm that these concerns from so-called investors around Tesla demand and competition were ill-founded. And that's putting it lightly. I mean, seriously. As I said in a recent video, if you're at a party, there's a fucking smoking hot 10 out of 10 in the room, and a bunch of 5s, 3s, 6s, and 2s turn up. The 10's still a 10. The presence of inferior products, and I'm going to get fucking cancelled for this, excuse the analogy. The presence of inferior products doesn't present a threat to the best product on the market.
Tesla has sold the same sort of handful of models for years now. And the question is, will Tesla continue to be as competitive as it has in the past, or will they become outdated?
This line of reasoning, which I hear quite often, is another manifestation of the bell curve. The thinking, or lack thereof, goes like this. Oh, it hurts so much, I'm using my brain. I'm just demonstrating the amount of pain involved in actually thinking for people that don't do it regularly. The thinking goes like this. The Model 3 was first released in 2017. The name of the product hasn't changed. Therefore, the product itself hasn't changed. That's right. Just like the iPhone, 15 years old, hasn't changed since because the name's still the same. Good thinking, bruh. If you're unaware, which many consumers may be, being unaware doesn't mean that the thing that you're unaware of isn't true. Tesla actually continuously updates their products. If you compare spec for spec, feature for feature, function for function, the original, very first iteration of Tesla's Model 3 back in 2017 to the current 2022 version, they're chalk and cheese. More range, better performance, new thermal management system, new features, new functions. I could keep going on. Tesla constantly, simultaneously tries to remove parts and processes, drive their costs down, and add and implement new features and functions. Unlike most brain-dead automotive companies, who sit around in a gigantic circle jerk thinking about how many new cup holders they should put in the 2023 edition of their vehicle and holding off all new updates and any new features until that new model year is ready, Tesla constantly updates continuous and never-ending improvement. So the idea that Tesla's vehicles could be stale because, Model 3 came out 5 years ago and Model S came out 10 years ago makes no sense. If they weren't continuously updating them and improving the technology, the features, the functionality, the range, the performance, that'd be a fair point. But they are, and then of course there's a software component. Even if the hardware itself remained identical, which it doesn't, but even if it did, just like your operating system or your iPhone continues to get better with new OS updates, the same is true of Tesla's vehicles. They get better with time because of new software updates. They add features and functions. Sentry mode wasn't always available. Dog mode wasn't always available. Karaoke wasn't always available. I mean, hello, Steam is now available on a Tesla. You can literally play Elden Ring in a fucking Tesla now. Couldn't do that a few years ago. Tesla's 2022 Model S and X can play GTA 5, Elden Ring, pick your fucking game. That is not true of the 2012 Model S. So once again, this is one of those errors in reasoning or severe lack thereof that a lot of so-called investors make. When I hear these kind of statements, I literally want to claw my eyeballs out. If Tesla wanted to cater to these dolts, what they could do, every time there's a single change to the Model 3 or Model Y, in parentheses, Model 3 long range, parentheses, version 623, maybe then people would get it. Oh, it changed 623 improvements since, I didn't know that. Thanks for telling me, Tesla.
Further fueling concerns are customer wait times for Tesla cars, which dropped sharply over 2022. Some investors see this as a sign demand is already softening. Musk addressed these concerns on Tesla's third quarter earnings call.
I can't emphasize enough. We have excellent demand for Q4, and we expect to sell every car that we make for as far into the future as we can see.
So Elon Musk, the techno king, formerly the CEO of Tesla himself, the guy that has more insight into the company, their plans, their ability to drive costs down in the future manufacturing innovations, economies of scale, material price coming down, on and on and on. He sees order flow. If the guy that understands more about this company, their order flow, demand, and their ability to drive costs down and increase production into the future, It says they have so much demand that they'll sell every vehicle they produce for years. I mean, literally as far into the future as they can see. It's worth paying attention to this. If you happen to be a self-hating, basement-dwelling Tesla short seller, you might think, Elon's a fraud, he's a liar. Of course, you're welcome to project whatever traits you don't like in yourself onto Elon, that's totally fine, but hate to rain on everyone's parade here, but the guy's honest to a fault. Now, this is one of the major mistakes a lot of so-called investors make. They're so thick, their ability to judge one's character is so clouded by their own messed up mind. They don't understand this guy doesn't say things he doesn't believe to be true. And I want to talk a little bit more about wait times. I wish I didn't need to explain this, but it is actually worth explaining. Tesla's wait times, until very recently, were unreasonable, to put it lightly. They were fucking absurd, ridiculous, in fact, embarrassing. It is not a good experience for any customer, anywhere, to order any product, let alone a vehicle, and have to wait 6, 9, 12 plus months to take delivery. The only reason Tesla's wait times blew out that much is despite incredible price increases, they couldn't ramp up production fast enough to alleviate this. They had to keep jacking prices up to absurd levels just to keep demand and wait times in check. Tesla never wanted such absurd wait times or such embarrassing, in Elon's own words, prices on their vehicles. It was a temporary necessity. As they continue to ramp up production, Tesla's going to continue to drive the wait times on their vehicles down. In an ideal world, wait times on these vehicles should be around maybe a month, at most 2 months. Just enough of a buffer, no more. You don't want people waiting months and months and months, the better part of a year, to take delivery of a vehicle. It's absurd. It should be obvious. So Tesla's goal has always been to drive their wait times down to the most reasonable time possible. There's a lot of moving parts and this is dynamic. This is why pricing changes constantly. Tesla doesn't want ridiculous wait times. They want just enough to ensure they're selling through all of their production without having customers waiting obscene amounts of time. Just for reference, I just checked. In Australia right now, the wait times on most Tesla vehicles, which are being exported from China, Shanghai being Tesla's main export hub, are between 1 to 4 months. This is reasonable. I kind of feel embarrassed for the people that I need to explain this to, but you guys understand this, right? Tesla doesn't want 6+ month wait times. It's stupid. Can we at least agree on that part? So if Tesla continues to ramp up production and successfully reduce the wait times on their vehicles from absurd to less absurd to kind of reasonable to great, this isn't an indication of a lack of demand. It's an indication of Tesla successfully ramping up their supply and dynamically adjusting things so they can deal with the ridiculousness of 6+ month wait times. This was never sustainable, never desirable. Tesla never wanted their wait time to be this long, but their hand was forced. You have to look at all the factors here and just go, oh my God, wait time's going down, therefore no demand. But again, some people just, their brain's out the fucking window right now. Too much fear, too much emotion, too much panic. They can't think straight. They can't reason. They can't consider multiple factors when analyzing the situation. So let me put this on the record. Tesla's goal will be to maintain the minimal, reasonable wait times on all new vehicles purchased ad infinitum. If out of nowhere, Tesla sees a surge in orders, 1 million orders for the Model Y come through in the span of a few weeks, you know what's going to happen? They're going to jack up their prices to ensure their wait times don't blow up further, deter customers from ordering while there's already a 1-year wait, get through some of their backlog, ramp production more, create more supply, and then bring prices back down. Hopefully, this makes sense. And I really do want to underscore right now, so many investors are suffering fear-induced brain damage. They can't think. They see a single data point and they have confirmation bias. I'm scared, Daddy, please hold me. And all they do is the minimal amount of thinking because it hurts too much and decide, oh, that's confirmation, there's no demand. I've said it before, I'm going to say it again. Clip it, count on it. Tesla will sell every vehicle they make for years to come. I didn't say they'll sell every vehicle they make at today's prices with today's margins, with today's technology. There's a lot of moving parts involved, but Tesla will ramp successfully to around 20 million vehicles per year or more. And between now and then, they'll sell every vehicle while they ramp production from 1.5 million to 20. Now, I don't have proof of this, but I do believe that my brain works enough to make this statement now, while others are panicking and concerned that there isn't sufficient demand for Tesla to sell through current production, let alone 20+ million vehicles per year.
And in December, the CEO said on a Twitter Spaces call that near-term demand pressures were driven by rising interest rate policies. Production disruptions also contributed to the stock slide last year, leading to Tesla missing its full-year vehicle delivery target. The EV maker said it delivered 1.3 million vehicles in 2022, up 40% from 2021. That was shy of its goal of increasing deliveries by 50% or more.
Not gonna lie, I'm kind of finding it difficult to maintain my composure here. This is false. Another example of small brain syndrome. It does my fucking head in. I really wish I didn't need to do this because it really frustrates me to see how fucking dumb some people are, but I do need to do this because some people are really that fucking dumb. This is from Tesla's earnings report. It's been the same fucking copy-paste line for many quarters in a row. Allow me to quote, over a multi-year horizon. So, let me ask a question. Is 2022 multiple years? Let me think here. Can someone help me? Is 2022, is that multiple years? It's not? It's 1 year. Oh, okay. Okay, so 2022 is 1 year, but Tesla's goal referred to multiple years. Well, hang on a minute. If 2022 is 1 year, then doesn't that mean that we need to factor in other years as well, so we get to multi-year rather than a single year, we expect to achieve 50% average annual growth. So, I think Tesla's made it relatively clear here, multi-year horizon, average annual growth, not single year annual growth. No. Multi-year annual growth. Interesting. Now, there's a little bit of additional context, clearly pointing out the brain damage in this statement that Tesla missed their goal. They didn't, you fucking moron. It says multi-year horizon, average annual growth rate of 50. Hello, you need to factor in multiple years. Words matter. The other thing that we need to discuss here, the forced factory shutdowns, the supply chain challenges, logistics issues. Despite that, Tesla's production increased year over year by 47% with a ton of vehicles in transit at end of quarter. They will get delivered in Q1. If you factor that all in and account for the lost production with the Shanghai shutdowns and everything else, Tesla would have exceeded 50% annual growth on vehicle deliveries just in 2022. But that was never their goal. Again, refer to the fucking text from their own earnings report quarter after quarter. Why do people not understand this? Why do people not know how to read words? I mean, I don't get it. Why do people invent meaning where there is none? I just don't understand. You have to be a fucking potato to claim that Tesla missed their 50% target last year. I mean, you actually have to be a potato. Multi-year horizon. Average annual growth. All right, I'm done being condescending. Let's move on.
It would have needed more than 1.4 million to hit that target. News of the shortfall pushed stocks down another 12% to start the new year, its largest single-day decline in more than 2 years. Intermittent factory closures at Tesla's China plant, its largest by volume, were one part of the problem.
China's zero COVID policy led to a number of shutdowns at its factory in Shanghai, which obviously created supply issues of its own.
Tesla also faced issues at new factories in Texas and Germany, where it struggled to ramp up production. Musk addressed those problems in a May interview.
Both Berlin and Austin factories are gigantic money furnaces right now.
Rising supplier and logistics costs, combined with soaring inflation, contributed to these production setbacks.
What's that saying? A chart's worth 1,000 words? Something like that. Just regarding these production setbacks, I thought that this visually summed things up relatively well. We are looking at US light vehicle sales, 2022 versus 2021. These aren't electric vehicles, they're vehicles, light vehicles in the US. We can see Tesla increased their sales in the US of light vehicles by 44% year over year. Government Motors, you did it, Mary, you led. Actually, she didn't lead. Increased by 3%. BMW, down 1%. Hyundai Kia, down 1%. Ford, down 2%. Subaru, down 5%. Toyota, down 10%. Mazda, down 11%. Stellantis, down 13%. VW, down 14%. Mitsubishi, down 16%. Volvo, down 17%. Nissan, down 25%. Honda, down 33%. Tesla stock, down 70%. I'm sure I had a point here, but I don't know what it is, so let's move on.
Tesla and every manufacturer making EVs today is confronting rapidly rising costs, from the raw materials that go into the batteries to construction-related costs, or frankly, even labor-related costs. All of that is going up, and the car industry is not one with huge profit margins. 1, true. 2, Tesla's not a car company. And 3, that is demonstrated by their industry-leading profit margins, around 3 times higher than the industry average. So yes, the automotive industry isn't particularly profitable. Tesla's making 3 times as much profit as an average automaker today. This is before autonomy is solved, before the $25,000 vehicle, before they continue to drive the cost down, ramp up production, and benefit more from economies of scale. And they're already making 3 times more than industry average. So important context. Just wanted to put that out there.
For Tesla, this included spending roughly $11 billion in the first quarter on items needed to make and sell cars.
Overwhelmingly, our concern is how do we keep the factories operating so we can pay people and not go bankrupt?
Overvaluation is another factor some investors and analysts say is complicating Tesla's shrinking stock price.
Tesla has been egregiously overvalued for the last couple years based on hype.
At its peak, Tesla was worth more than the 10 largest automakers on the planet combined, despite having just a fraction of their sales.
A lot of investors who have debated whether or not Tesla is an overvalued company have done so based on the fact that it owned a huge percentage of the US EV market, and that it was the first mover in that market.
Its valuation was driven in part by its CEO, and some investors say Musk's promises about future vehicles have pushed shares higher, though many of the cars didn't come until years later. The latest example, Tesla's Cybertruck, which was first unveiled 3 years ago and still hasn't hit the market.
Cybertruck is going to be awesome. It's worth the wait, believe me.
And more directly, Musk's move to offload billions in Tesla stock, in part related to Twitter, has pushed down Tesla's share price.
Anytime anybody sells $40 billion worth of company stock, it's going to bring that stock price down. What isn't clear is how that specific action is influencing other investors.
Tesla did not respond to requests for comment. Tesla's stock sell-off comes as investors across the market prepare for what some see as an oncoming recession. A downturn could slow car buying, especially for pricier vehicles.
Will those people who might otherwise, in 2022 or 2021, purchase a $60,000 vehicle, will they instead purchase a $40,000 gas-powered vehicle?
On Tesla's third quarter earnings call, Musk said that he sees the EV company as recession resilient.
Let's say 2023 is a brutal recession year. Even then, we generate meaningful cash.
Tesla investors are now waiting for later this month when the car maker will report its full year earnings, which could give a glimpse of the stock's prospects for the coming year.
Don't want to rain on anyone's parade here, but in a few weeks, Tesla's Q4 earnings results won't tell investors anything they don't already know. We're going to see the same copy-paste line about an average annual rate of growth in deliveries, over 50% over a multi-year horizon. That won't change. If it does, that is big news. Tesla will print a shit ton of money. They will reiterate there are no demand concerns whatsoever. They will explain, hey morons, the reason we made the pricing adjustments in China, etc., because of new incentives coming in and consumers delaying purchase of their vehicles. It's not a demand issue. The demand's still there. It's just they pushed off their orders for a little while, made pricing adjustments to sell through production. You have nothing to worry about, but feel free to worry anyway, because hey, if you want to worry over nothing, it's your prerogative. Tesla will discuss the inevitable 2023 recession and the fact that they don't think it's going to meaningfully impact their demand or their sales, but they do have pricing power, so they can adjust pricing dynamically to continue to sell through production, which they will. They will confirm that they are still on track to meet their goals over the long term, and despite the noise, nothing fundamental has changed. Of course, Wall Street analysts won't believe Tesla. Many retail investors won't believe Tesla. They'll continue to panic, sell their stock, freak out, think it's the end of the world, think demand's collapsing. And when Tesla continues to sell through all their production quarter after quarter after quarter after quarter, as we get through the recession, everybody's going to forget this whole thing happened. Except me. I got a long memory. I personally don't think at this point in time the stock market is going to believe anything Tesla says on their earnings call. They won't take them at their word. If they did, they would have listened to Elon last time in November saying, oh, hello, we've got so much demand, years to come, hello. So make of that what you will. But when people are suffering from fear-induced brain damage, they just can't hear the facts, they're unwilling to accept reality, and they'll just conjure up and invent their own meaning where there is none. And I believe that's going to be the reaction to Tesla's Q4 earnings in a couple of weeks' time. I don't think it matters what Tesla says, what Tesla guides. I don't think anything they say is going to matter. I think most investors out there would prefer to conjure up their own narrative, their own reality, ignore everything Tesla says, continue to panic, be fearful and worried because I'm scared, Daddy, please hold me. I hope this plays out because I'm still buying with every spare cent. The more fear, uncertainty, doubt, panic, and legitimate fear-induced brain damage in the stock market, the better for me. May the panic, fear, uncertainty, and doubt endure as long as possible. And don't forget to head over to Patreon, 2 exclusive videos, including the spiciest Q&A of all time, sharing my thoughts on Andrew Tate, his arrest, the allegations, my vax status, business, mentorship, masterminds, fear-induced brain damage, a Starlink IPO in 2023, and loads more. So, see you over on Patreon. If you're not a member of Patreon, you can join with the card in the corner or the link at the pinned comment, and I'll see you over there. Love ya.